Thanks, SOSV. I'm excited to be here to chat with Will and Cody about this huge opportunity and somewhat daunting space of cement and concrete. Cody and Will, how did you guys get into this, a little bit daunting space, the hard to abate sector, if you will? Cody, why don't I start with you?
Yeah, yeah, thanks for the question, Katie. First of all, I always take a little bit of issue with the hard to abate uh, uh, naming. I think that was named with considerable hubris when we felt that electricity was easy to abate. Right? I think that we're maybe 20 years on since since that name has taken off, and electricity has not been cleaned up yet. So I'm not. I think it is really just different to abate. Right. The key thing about cement, of course, is that um, the majority of the CO2 emissions associated with producing cement come from chemistry, not energy, right? So today we make cement by uh, taking a rock called limestone. That rock is about half CO2 by mass. We have to release that CO2 from the rock in order to get at the calcium that's in that limestone and turn that calcium into ordinary Portland cement. And for me, I happen to be a chemist, right? So that seemed like actually a much more straightforward problem than an energy problem. Um, and I got into it because I wanted to have a large impact on climate, and I wanted to do something that matched my skill set. And I noticed that cement and sort of mined materials overall had less funding per ton of CO2 emissions compared to any other sector. And at the time, I was in my PhD trying to think of something to work on, and it seemed like the right cross section of size of problem, uh, few people working on it, so it could have a high marginal impact, and then also a problem that was well suited to my skill set.
Will, what about you? How did you get into this space?
Yeah, I think very similar to Cody. My background is geochemistry, so I was doing my PhD on all things sort of carbon removals, carbon sequestration, carbon mitigation, that kind of stuff. And from a technical standpoint, it was very obvious that the cement industry posed this huge opportunity for decarbonisation, and can really push the needle on carbon removals and mitigations. And as a result of that, and at the end of my PhD, I was really looking for opportunities where I could do impact based work, and the combination of the size of the industry and the carbon abatement potential was a match for me. And yeah, that's why I decided to start Cocoon with my two co-founders, Freddie and Elliot.
Yeah, can you run a little bit through Cocoon's technology and how it works?
Yeah, so Cocoon centers around electric arc furnace slag, which is the slag that's made when steel is made in electric arc furnaces. In the UK and the EU, a lot of steel is made through blast furnaces, which is fossil fuel powered furnaces. But in the US, it's mostly electric steel these days. And that slag, that byproduct, is currently underutilized. So our technology takes that electric arc furnace slag, and we turn it into what's called a supplementary cementitious material, which is a powder that can be cut with ordinary Portland cement in order to reduce the overall emissions of that OPC. So our electric arc furnace slag costs us about 80 kilos of CO2 to make it, and make a ton of it, in comparison to OPC, which is approximately a ton of CO2 to make a ton of OPC. So yeah, there's a big carbon saving available there.
Okay. Cody, can you walk through brimstones quickly too?
Sure, yeah. In some ways, it's similar. Right? We noticed that production of cement today use limestone. Like I mentioned previously, limestone is about half CO2 by mass, and you have to get rid of that CO2 into the atmosphere in order to make cement. Um, our whole philosophy has always been that the only system that scales globally is the global financial system. So if you're going to decarbonize anything, it has to be a substantially lower cost and higher profit process. And part of that for building materials is you need to stick with Portland cement based cements, and that's because there's considerable risk adjusted costs to using sort of novel cements. So we figured out that you have, in order to be lower cost and higher profit, you have to stick with making Portland cement. Um, and I want to be clear, right? SCM is separate from cement. SCM is something that's blended into all Portland cement. So that is, very much compatible with that philosophy. Um, and we said, okay, we need a different source of calcium. So we looked around the world and we realized that limestone was certainly not the only source of calcium. There's also these rocks called silicates, which many of them are calcium bearing, and that actually contains most of the calcium that's in the world. Are these calcium bearing silicates? And we spent some time developing a process that can make ordinary Portland cements the exact same cement from these silicates, and these silicates have no CO2 in them, so you don't release the CO2 associated with the rock. The only CO2 emissions are associated with energy, and that could either be CO2 free energy or CO2 intensive energy. Regardless of the energy you use, our process is lower emissions, but by a substantial margin. It could be zero emissions, and even depending on the time scale you look at, could be carbon negative. But fundamentally, the core of the technology is a separations or refining technology that takes a rock, extracts the calcium from it, makes ordinary Portland cement. We also extract the silica and make supplementary cementitious materials, and we also can make a number of co-products. One we've announced publicly is smelter grade alumina, which helps juice our economics.
Okay. And one thing that I thought was particularly interesting that you said about kind of working with it in this current framework of the cement and concrete sector. I know previously iterations of startups have tried to kind of like compete directly with the industry, and there's kind of more of an emphasis of like working with incumbents or like working within the structure that's already created for the sector. And I'm wondering if that's a learning that has been learned over the past, many years of trying to scale this industry.
Yeah, I think so. From our standpoint, obviously, we're a couple of rounds behind Brimstone, but we still have really good engagement with the cement industry, and principally, they're very concerned about their carbon footprints, but also, they're very interested in cutting the cost of a ton of cement, and being able to do that candidly with new technology is something that's super interesting to them. So I think what's a key learning for us over the past couple of years is that the carbon benefit is nice, but it has to be backed by some compelling financials as well. And I think Cody was kind of touching on that in what he said previously. But yeah, the idea of trying to compete with the behemoths in the cement industry is very, very tricky, very difficult.
Yeah. Um, in terms of the opportunity here, I've noticed and has been reported on that hyperscalers are starting to kind of use low carbon concrete and cement for data center projects or just for operations, and kind of being a little bit of a catalyst to try out these materials for the sector. Why are they interested in this technology, and how are they helping the sector?
Great question. So, as you and Axios actually reported on, Amazon and Brimstone have a commercial arrangement, and it's a pretty exciting commercial arrangement because it is actually physical offtake, or I say it's a commercial arrangement around our physical product. That is, critical for Brimstone, of course, because it's not just selling attributes; it's actually selling the material. And in order to create any attributes, you need to actually put the material in a building, or else the attribute's not created. And it basically just shows that if you make ordinary Portland cement, then it is possible to sell the physical product. That's still not clear for alternative cements, and that's Brimstone's strategy in a nutshell, right? Is that we want to make it easy for the customer to buy. The hyperscalers all have large climate goals, and they appear to be sincere about these goals. And they're also building an enormous amount of data centers. Amazon, who we have a commercial agreement with, of course, builds a lot more than just data centers. Everything from fulfillment centers to Whole Foods as well are buildings that Amazon builds. So they have their carbon footprint is especially heavy on the built environment because of that. But because the data center boom, all of the carbon footprint. So these hyperscaler companies have become quite good at procuring clean energy, either directly or through offset credits. So I think I was on a panel at Climate Week with someone from Microsoft who mentioned that the majority of Microsoft's data center emissions are actually associated with the building materials, right? Um, and that's because they're so good at procuring clean energy. So, as long as these companies uh, stick with their climate goals, which it seems like they are, they uh, they certainly need to focus on building materials, and they're providing strong market signal for that these building materials um, are desired. And for Brimstone, however, things are like that is great. It is exciting to have that strong market signal, and it's very helpful. I think it speeds things along. But like Will was saying earlier, the only way to actually scale is to be able to have a cost competitive process, right? To be able to make these products at market rate or better than market rate, right? And be more profitable, because that's the only thing that's actually going to scale globally, right? Decarbonizing data centers and hyperscalers is not going to decarbonize cement globally. And you really need something that is cost advantaged. I think that in the beginning with first deployments, technologies are often more expensive, and it is helpful to have that market signal to pull these technologies into the market. But regardless of that market signal, technologies that are lower cost tend to scale.
Yeah. And you mentioned Microsoft. They did an investment in Forterra recently, another company in this space. What are the challenges, the biggest challenges? I mean, this is an emerging sector. Nobody is producing this at a mass commercial scale yet. What are the biggest challenges ahead for you guys?
Yeah, it'd be interesting to understand Cody's perspective on this as well. But I think going back to the hyperscalers, it's very interesting because they kind of provide a new route into the market or to garner offtake agreements in relation to maybe 10 years ago when you'd be looking for an offtake agreement from, one of the 5 or 6 cement majors in the world. And what that really helps you do, being able to procure an offtake from Amazon, is get that long term data from tilt slabs, properly engineered structures in order to build confidence in the material, such that engineers will be able to specify it in years to come. I think, yeah, the biggest challenge that I see is really trying to speed up that regulatory process and get the material in the ground and show people that it's durable and it's here to stay and that it performs how it is expected to. And the hyperscalers like Amazon and Microsoft are yeah, I mean, they're really helpful in that regard because they do allow you to have product in the ground that folks can come and see and say yes, it's still there and it's durable.
And kind of, I know one challenge, the changing federal policy that's emerged this year. And, Brimstone recently got kind of caught in the crosshairs, had a grant canceled. Cody, can you walk us through the process of, when you kind of first learned of this and then kind of how you are able to navigate it?
Yeah, so we had a $189 million award through the Department of Energy for a plant that produced supplementary cementitious materials, ordinary Portland cement, and smelter grade alumina. And that was a commercial demonstration plant, so a first of a kind commercial plant. And the in back in May, we were alerted via email that our award was being canceled. Um, and you know, I have to say that um, we like Brimstone philosophically believes that things that are lower cost will scale globally, and government support helps that move faster. Right? A lot of times, that's not universally true, um, but if government support is necessary, then the technology will not have the market size and scale impact that we want it to. So our fundraising strategy and our deployment strategy has always discounted government awards heavily. And that served us quite well in this circumstance. Right? So at no point in Brimstone's history have we ever been depending on that money. When we've raised funds, we have for example, if you need matching funds, we've always raised the full amount that is needed, not the amount is matching, and we will count that money once it's spent, right? And not before. So, when that award was canceled, it wasn't like it was disappointing, but it wasn't a huge shock to our system because of that. So I think I don't have much advice for companies that are sort of navigating a award cancellation where they depend on those funds. But if you are in a position where you have an award and you think it may be um, may be canceled, or if you don't have an award but you think you might want to apply for some in the future, I would highly recommend not depending on that subsidy. And that way, the uncertainty associated with that subsidy um, goes away. I think there's also like you ask what some of the biggest risks are, and the biggest risks are associated with timeline, and Brimstone thinks very hard about how we can reduce timeline for and also reduce cost for building large facilities. And when you take federal money, you're forced to go through a NEPA permitting process that you may not have to go through otherwise, right? So Brimstone, we can use rock that is already quarried in existing quarries, which means that we don't have to build on or quarry public land, which means that otherwise we would not otherwise have to go through that what's called the NEPA, permitting process in the United States. So not having that award probably actually saves us about a year of timeline. And there's we were you know, so there are, you know, potential benefits, right? Of course, um, there's more money that we need to raise, but it's actually Brimstone was planning on raising all of that money regardless, because that's our strategy. So it doesn't materially change. It did not materially change Brimstone's trajectory.
Okay. What are the next steps for your plant? I mean, this is the big commercial demonstration, scaling out the technology. What are the next steps in the timeline?
Yeah, so we're in an engineering phase right now, and and soon to transition into a permitting phase. So that and then when we start building, we'll certainly need to raise, or in order to really start building, we'll need to raise more money.
What about you, Will? You're in the process of planning your pilot facility, I think. Can you tell me more about the next steps for Cocoon?
Yeah, so the pilot plant has now been constructed and is currently operational in the southern US. So for us, it's a lot of testing. We're still gathering data on the exact operating configurations, and really, what we're particularly interested in is getting a really good understanding of how our one module that we've made, what the OpEx associated with running that is, such that we can double check our techno-economic analysis and take that step before we scale up to, I guess, scale laterally, because our technology is modular. So yeah, it's a lot of testing and yeah, a lot of
Yeah.
hard work on site.
Cody, do you have any kind of lessons learned about since Brimstone has gone through that specific process? Like what are the things you need to pay attention to and not trip up on?
Well, I think, it sounds like Will is quite well prepared for this, right? The key thing is validating the techno-economics, right? Um, and that requires, you know, that requires a healthy dose of realism, right? So, and it also requires a healthy dose of creativity.
What do you mean by creativity?
Yeah, so the healthy dose of creativity is we have to recognize that industrial processes have not really been built in the United States for 50 years, 70 years, right? I think the last major cement plant had pretty dismal economics. That was built in the United States. That was in the early 2000s. The last major oil refining technology, I think, was an ethylene cracker in Pennsylvania in the early 2000s, but that wasn't a full oil refinery. Like, there hasn't been an oil refinery built in the United States since the 70s, right? And same with the fertilizer plant, right? So we, the traditional engineering model is clearly not working for capital deployment in the United States.
Mm.
We have to take lessons from countries that are deploying capital well, right? Like, just take that, India, China, these are companies that, are building things. And, there's a a few things you can learn, right? Like basically, you can take in as sort of a first principles approach, right? And so what Brimstone does is we look at a buildup of the costs, we see where they come from, and then we calculate what we might call an inefficiency index, or someone might call an idiot index, which is the ratio of the estimated cost to the minimum possible cost that's like bound by the laws of physics, right? So the uh, the ratio of the cost of the materials to the cost of the equipment, or the ratio of the cheapest labor that's on Earth relative to the what you're being charged for labor, and try to figure out how you can um, learn from these things in order to reduce the cost of deployment so that we can actually deploy technologies within the United States and everywhere else in the world, and decarbonize the entire world's production.
What does this sector need to scale? Like, what do you need? Is it more financing? Is it better policy? Is it more aggressive off takers? Like, if you had a wish list, what would it be?
Probably all of those things, I guess. The thing that probably keeps me up a bit at night is the folk funding. I think that's a super interesting point. Um, it's been, it's a rare point in the world history that so many different and new technologies are being built for the first time, and how you actually finance that and de-risk it, and you know that's all very, very interesting. And I don't think it's necessarily clear how you do it outside of taking the equity hit and raising privately. As Cody alluded to earlier, it's best practice not to rely on public funds and that kind of thing. So yeah, the folk for debt financing for folk, I don't know if that's a reality soon. But yeah, that's a super interesting area for sure.
Yeah. So,
I,
first of a kind financing, essentially. Like, Cody, you're going through this right now. I mean, do you have things you can comment on in terms of like creative financing with opportunities?
Yeah, so all the things that you listed, Katie, I agree they're all helpful, but I think they can actually, I kind of like the economist framework where economists are very good at translating everything into money, right? And I think that all of those things, whether it's offtake policy, government support, removing permits, finance, like all of these things, they're all translatable into money. Like, what do we really need? We need more capital, right?
Mm,
And what's going to unlock capital? Like high risk adjusted returns, right? uh,
yeah.
and we need to think as companies, we need to think very carefully and very clearly about how to achieve high risk adjusted returns. So at Brimstone, in our piloting effort, we spent a really long time, or I guess let me back up a little bit. Right? Large capital intensive things are going to be long timeline, right? Whether it's a data center or it's a cement plant or it's a steel plant or an oil refinery, or a skyscraper, right? These are big, expensive buildings, and they take a long time to build, right? uh, and no one has ever done anything differently. Not Tesla, right? Not OpenAI, right? And I think that tells us, and you can look at like what you think the minimum amount of time that all the tasks that are involved in building something takes. It tells us that maybe you can shorten the build time from 5 years to 3 years or something like that, but you can't shorten it to 1 month, right? So the building these big plants, it's going to be capital intensive and it's going to be a long timeline. So how do you get investors comfortable with that? Um, and Brimstone's philosophy is like, if you're going to put a lot of money in, then you don't want to be risking that money, right? Especially if there's a relatively long timeline. So at Brimstone, we say, well, you need certainty of return and you need high return. So we spent a long time trying to figure out how we could put what's called TRL-9 unit operations together. That is to say, pieces of other plants that have scaled fully in other industries doing the same or similar chemistry, and how we could put those together in a new way to do the chemistry that we want to do. And by doing that, we take the tech risk and we bring it down to nearly zero, right? Because you're doing the same chemistry with the same piece of equipment. You're just integrating them slightly differently for a different rock. This is actually a very, very common thing in the mining industry. There are new plants built all of the time because no ore is exactly the same. So you always need to put some new equipment together slightly differently, or I should say, old equipment put together in a new way. Um, so Brimstone, spent a long time thinking very carefully of how we can have very, very low technical risk in order to make our, TA and economic assumptions both very rigorous and very believable, and also have very, very low risk in creating that return. And then we also thought, like, how could we make our returns as high as possible? And one of that is co-products, right? One of the things that we say is our process actually makes seven times as much product per ton of rock mined than the conventional industries that we're displacing or displacing, right? That's SCM, OPC, and smelter grade alumina. And but that is a so one of the reasons why we added that alumina co-product, right, is because it really was able to, juice our returns without increasing technical risk. So, like, I think really, when you've seen, large capital deployments that are long timeline, like think of it, data centers or a, electric vehicle factory or something like that, these big, capital intensive deployments, they are relatively certain um, technical risk and relatively certain return. And if you can, and so Brimstone spent a long time creating those things, and that's I think that will serve us well in our capital deployment strategy, and certainly serve investors well when they want to make money.
Yeah. I think that's one of the key learnings for across kind of climate tech sectors, when you're making, actual physical materials or hardware, is to bring in that, higher margin product. Whether it was, Tesla starting with the Roadster or, companies like yourself selling alumina. So, you can actually make a higher margin um, to, continue to operate and survive.
That's right, and I would
Um,
also say that, the higher margin is important, but the other thing about the Roadster that's not talked about as much is it was very low tech risk, as in, they didn't need to invent a new type of battery or a new type of, drivetrain in order to make the Roadster. They could basically take things that were off the shelf, and that made a very expensive car, right? But that was fine because it was high value, right? And so the low tech risk combined with the high value and high return is really, I think, the secret, the sort of secret sauce for scaling. And that's what Brimstone has been working on and is scaling now.
Okay. What are you optimistic in for 2026, for this low carbon cement and concrete sector?
I think what the hyperscalers are doing is, it's super interesting, and it's inspiring. Like, being able to be a part of what is, the next generation of technology and, data centers and AI, and have a big part in the decarbonization, or building those low carbon assets for these huge companies, and how invested they are in actually doing it is, is super inspiring. And I think every day we all get out of bed at Cocoon because we know that we're having big impact, and the hyperscalers provide a channel for us to realize that impact. And that's special.
Okay. Cody, what about you? What's inspiring you?
I'm optimistic about an enormous amount of things. So Brimstone's scaling, right? It's amazing. Right? We have a process that's got, you know, that according to our pilot data has great economics, and we've got a process that makes fully on spec commodity products using TRL 9 unit operations. There's very little technology risk, very little product risk because of those two things. And it's a point that 5 years ago I don't know if I thought we would be here in 5 years, right? And we are, and that's pretty incredible. I'm very excited about it.
Excellent. Thank you so much, Cody. Thank you, Will, for your thoughtful conversation. That's going to conclude our session. And back to you, SOSV.